Welcome to the Riskwiser Zone. I'm your host, Lewis. Today we're going to dive into two exciting stories that are making waves in the world of finance. First up, let's talk about the growing importance of copper in our daily lives. As technology continues to advance, the demand for this precious metal is on the rise. But what does this mean for investors? Our first story takes a closer look at how copper is becoming a crucial component in the production of electric vehicles, renewable energy systems, and even our smartphones. As we explore the world of copper, it's clear that its applications go far beyond just electronics. From infrastructure development to healthcare, copper plays a vital role in shaping our modern world. But with great demand comes great challenges. Supply chain disruptions, geopolitical tensions, and environmental concerns are just a few of the factors that can impact the price of copper. Now, let's switch gears and talk about a significant development in India's mutual fund industry. IndusInd International Holdings, the promoter of IndusInd Bank, has completed its joint venture with US-based investment firm Invesco Ltd. This partnership aims to reshape India's mutual fund landscape by combining Invesco's global investment expertise with IHL's extensive distribution network. The deal positions IIHL to expand beyond banking and deepen its presence in India's financial services ecosystem. With a combined reach of over 11,000 touchpoints and access to more than 45 million customers, this joint venture is poised to make a significant impact on the country's growing mutual fund market. As we continue to navigate the complex world of finance, it's essential to stay informed about these developments and how they may affect your investment portfolio. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and investment with a closer look at Berkshire Hathaway, the conglomerate led by the legendary Warren Buffett. As we explore the company's future prospects, it's essential to consider the impending change in leadership, with Greg Abel set to take the reins as CEO. Berkshire Hathaway's success is deeply rooted in its culture and philosophy, which have been shaped by Buffett and his longtime business partner, Charlie Munger. The company's approach to allocating capital, managing risk, and maintaining a strong reputation will likely remain unchanged under Abel's leadership. However, it's possible that we may see some adjustments to the company's equity investment portfolio or even the initiation of a dividend program. Abel has stated that he intends to maintain the company's culture and follow the same philosophy that has guided Berkshire Hathaway for decades. With a massive cash stockpile at his disposal, Abel will be on the lookout for smart acquisitions and investments to drive growth and returns for shareholders. The pending acquisition of Occidental Petroleum's OxyChem Chemicals unit is a prime example of this strategy in action. As we look ahead to 2030, it's difficult to predict exactly how Berkshire Hathaway will perform, but it's likely that the company will continue to thrive under Abel's leadership. With a potential market cap of between $1.5 trillion and $2 trillion, Berkshire Hathaway is poised for long-term success. While some analysts may have concerns about the transition in leadership, it's essential to remember that Abel has been groomed for this role and has a deep understanding of the company's culture and values. Ultimately, the future of Berkshire Hathaway will depend on a variety of factors, including market conditions, investment opportunities, and the company's ability to adapt to changing circumstances. As investors, it's crucial to stay informed and consider multiple perspectives before making any decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at two quantum computing companies that have been making waves on Wall Street: Rigetti Computing and D-Wave Quantum. Both of these companies have seen their shares skyrocket in the past year, with Rigetti advancing 2,570% and D-Wave Quantum advancing 2,840%. However, some analysts are now sounding the alarm, warning that these stocks may be wildly overvalued. Troy Jensen at Cantor Fitzgerald has set a target price of $18 per share for Rigetti, implying a 54% downside from its current share price of $39. Meanwhile, Kingsley Crane at Canaccord has set a target price of $20 per share for D-Wave Quantum, implying a 41% downside from its current share price of $34. So, what's behind these pessimistic predictions? For Rigetti, the concern is that its gate-based systems may not have practical use cases for most enterprises for at least 5 years. Additionally, the company trades at a staggering 1,253 times sales, which could make it vulnerable to a significant decline. D-Wave Quantum, on the other hand, has historically focused on annealing systems, which excel at solving optimization problems in disciplines like finance and logistics. However, its stock still trades at a pricey 3084 times sales, which may be unsustainable. It's essential for investors to approach these companies with caution and carefully consider their valuations before making any investment decisions. While quantum computing is an exciting and rapidly evolving field, it's crucial to separate hype from reality and avoid getting caught up in the frenzy. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.